So this is always a crowd favorite for everybody, the aggressive growth portfolio. Stick around. We're going to jump into M1 Finance and do a review of my aggressive 11 stocks that I own in M1 Finance. So I'd like to take this opportunity and welcome everybody back to the Independent Investor Channel. Just as a reminder, the channel is affiliated with M1 Finance. The links are provided in the description below. Please understand that if you do click on any of the links to any of the portfolios, this one included, the channel can receive a compensation for rolling out videos like this, and it helps support our efforts in showcasing the feature and functionality of M1 Finance. I'm obviously a user of the platform, and I like to roll these portfolio reviews out to not only showcase the aesthetics of M1 Finance, but also show progress within the portfolio. So with that, guys, we're going to jump into M1 Finance and conduct the review. So portfolio review of the aggressive growth portfolio. I haven't done one of these for a while. For those of you guys who are new to the Independent Investor Channel, this is opportunity to showcase one of two taxable brokerage accounts that I own through M1 Finance. They're very, very good for what I use them for. I use them as a passive platform. And as you can see, I have some underlying strategic goals that I do look to meet in these portfolios. They're both portfolios that I don't look at every day. As a matter of fact, I approach these 100% passively. I look to fund these up. I'm fairly certain this one gets funded with around $25 or so every couple weeks, nothing crazy. It really does indicate for a new investor that it doesn't take a whole lot of dollar cost averaging funding to flow into a portfolio and render some awesome success. Obviously, the returns in this are off the chain. They're fantastic. Real returns of closing in on $4,000. Not too bad for an account that houses just over $11,000. We met our $10,000 mark some time ago. And for a portfolio here that is going on just shy of 11 months old, pretty significant gains. So you can see here the $72.50 of inflows to the account. That's the hard dollars that I speak of all the time, or those are dollars that I go into my job and earn and have contributed to this, whether it be lump sum contribution or it's a combination of the lump sum payments with the dollar cost average funding that I do every couple weeks. And it's nothing crazy. At $25, I don't miss those dollars. And for new investors out there that are sitting back and watching how I seek out my exposure, at least on the aggressive growth side of the house, I certainly want to premise everybody to understand that this is part of a total comprehensive portfolio. And this by no means represents my portfolio in its entirety. This is just how I choose to seek out my aggressive growth prospects. There's only 11 names in this portfolio. I sold off my holdings in Netflix. I was regretting the sale initially. Now I'm actually pretty glad that I did that. I sold and took huge, enormous profit from Netflix when I sold it, and I was kind of bummed out that I did it. But now kind of looking at their subscriber growth and how they're organically growing their business, I think I made the right call in going ahead and trimming Netflix out of this portfolio and maintaining my position in another fundamental company that I do have problems with owning, but it's just been a phenomenal growth story this year in 2020, and that's Tesla. No doubts. You can kind of see here the ride has been fairly good. This is the obvious downturn here, end of March. It followed the market just like anything, and then it continued its V-shaped recovery until about here, and this is where I actually made a fund up in the account, and it's grown until the current time of filming this video. So we're going to cruise down, and I'll show you the holdings. Interesting enough, these, again, for those who have followed me for quite some time and they know what this portfolio is made up of, why I invest this way in this portfolio, and why I use M1 Finance in the way that I do. So 10 out of these 11 holdings are currently up in value. Obviously, Tesla is slowly making me rich. I just can't complain with the fortune that this has brought me here. I'm not going to say that it's by nature of any decision that I made because I'm an excellent investor. It was just one of those companies. I feel like it's the premier in the EV space. Then they're doing some pretty exciting things at Tesla, expanding autonomous driving, battery solutions, as well as their solar aspect of their business, and as well as their auto line, which are impressive to say the least. So Tesla is the largest holding in here, and that's by nature of this meteoric run-up that it's had. It happens this way. Sometimes it happens to the downside. Other times it happens to the upside, but we're not complaining at all. The only down name in the portfolio right now is Booking Holdings, and this is one of my favorite stocks, growth stocks, that doesn't get talked about very often. These guys are fantastic, and just I think down 1.33% here. I'm lucky with the pandemic hitting all of these travel and leisure stocks. I'm glad to see that this stock has actually recovered fairly nicely. But as we work down the list, Amazon, second tier to Tesla, has performed just off the charts. This will eventually transfer over to my brokerage account. That's just set up to allow myself a decision down the line to combine those accounts, because I don't think there's a whole lot of value in having multiple taxable accounts other than what I'm displaying to you now, and that is my ability to dollar cost average some of these great growth names and not hold them in my brokerage account that doesn't have the ability to allow me dollar cost average funding to this the way that M1 Finance does. So the real key here is how I'm leveraging M1 Finance and am able to throw a very small amount at these 11 high price growth names and just trickle feed them over time and passively be an investor in these fine companies. Obviously, Facebook and Google, very bullish names in our community. Don't need to say a whole lot about those. I'm super stoked to own the companies. CRM Salesforce has silently been on fire. Low 140s during 2020 and now up close to $250 a share. It's just been a beautiful performer in here in the cloud space, as well as Adobe Systems. You look at some of these percentage of returns, guys. These real dollar returns they're impressive, no doubt about it. And some people out there might say, well, why don't you just put your entire portfolio in these high growth names? No, thank you. I'm good. I invest the way I want to invest, and I invest with scale. I'm very disciplined. I'm about right with my exposure to these growth names, and I do own a couple shares of Amazon in my other brokerage account, the larger account, as well as a larger position in Facebook. These are just the partial positions, right? So I do own whole blocks of share in my other accounts, and again, when I combine these, it will be the combined value of the whole share appreciation as well as what I've been able to DCA in this account and capital appreciation in this account. So Adobe and NVIDIA has just been an absolute grace performer in 2020. It's just been on fire. PayPal is also up there, $250, man, rate of return, 830. And if there's a real takeaway for you guys, I'm on to something here. I'm investing in a lot of companies that a lot of people have a hard time holding, but not investing in because they run up so quickly. And I'm just providing you guys an example of what some of these great growth companies or new companies that have IPO'd here in 2020, like Uber, can do if you just buy a little bit of it and just freaking hold it. Just freaking hold it, guys. 10 out of 11 I'm winning on. 10 out of 11. Try to get those kind of odds at the casino. Good luck. And I'll take my odds, and I'm only down incrementally here in Booking Holdings. It's just a matter of time where I'm batting 1,000 here. I'm going to have a 100% win streak in this portfolio in due order, and that's going to be exciting times. Alibaba has also been silently on fire. Every one of these have performed in the manner that I've put them in this portfolio to perform, and I just can't complain, no doubt about it. So that'll round out the portfolio review for the M1 Finance aggressive growth portfolio. You guys are going to want to stick around and stay tuned for my other taxable brokerage, which is also passive in nature. We'll get into those details, but it really allows you to sit back and understand the nature by which I'm seeking my exposure to aggressive growth. This is a great way, without a lot of money, relatively speaking, to seek out exposure in some of these companies that would be very, very difficult on a traditional platform to enter whole shares in because they are higher priced. And a lot of retail investors don't have that type of capital to buy whole shares in some of these companies. M1 Finance provides that opportunity to you guys. So with that, I really hope you appreciate the review. We'll kick you back to YouTube and we'll conclude the video. So we've come back out of M1 Finance, guys. I really hope you appreciate this. This is an interesting way of seeking aggressive growth exposure and doing so passively. It really demonstrates for a lot of investors out there that don't have a lot of starting capital what's possible getting some exposure to maybe multiple names and getting exposure to names that you may not have the ability to on your normal brokerage platform. Some of the majors don't have this ability with the pie structure to just throw your contributions at and have those dollars dispersed across the names that you want to invest in. Guys, if it's your first time to the channel, want to make sure and hit the notification bell, hit the subscribe button for me, share the message with anybody out there that you know needs introductory information on the stock market, and finally leave your comments at the bottom of this video. Let me know that you appreciate these occasional rollouts, portfolio review videos. I think they're important for a lot of people to understand and be provided example of what's possible in the investing arena. Investing has never been more exciting. It's never been more accessible. And it just takes investing platforms like M1 Finance to make that access that much more of a reality. Guys, thank you so much for tuning into the message, and good luck in your investment future.